Good morning, traders and investors. Are you guys ready to start another week right here with Pre-Market Prep? I'm excited to start another show with you guys. Let's get into it. Bed Bath & Beyond, energy crisis, digital world acquisition. We'll talk, of course, about what's going on with Gazprom, OPEC Plus, and, of course, all the oil news that's out there. CVS with Signify Health, Cardinal Health, Elliott Stake. And of course, we'll take a look at what's going out in the markets, getting you ready for this week. A lot of action to talk about. Let's talk, of course, about the non-manufacturing PMI that's going to be coming out at 10 a.m. That's your economic data to watch out. Welcome to it. Rise and shine. It's time to start the day. Pre-market prep. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. Good morning, traders. Let's go ahead. Let's bring on the guys here, Joel Elconin and, of course, Dennis Dick. How you guys doing?
What's up?
Not bad here. I mean, considering all the bad news we've had over the weekend and the bad day that we had on Friday, we're up 26 handles at 39.50, closer to the high than the low of the session. Dennis is going to explain to us with all this oil and crude talk and reductions why it's down 21 cents at 86.66. Gold is up 210 at 17.2470. Silver back in the 18 handle, up 47 cents at 18.35. Bitcoin futures, they're up $35 at 19,810. And Ethereum, ooh, that's moving nicely. That's up $119 at 16.55. Triple D.
How's the weekend?
You had your Michigan thing on, and now you don't.
No, I know. I should have kept the Michigan thing on for you. I had a coat on because I was just outside. I got the landscapers out there. I was talking to them. So I have my Michigan just to represent you, Joel. Good weekend?
Yeah. Believe it or not, well, the game was fun. I mean, besides being 90 degrees, but believe it or not, I created a little controversy over the weekend.
Not you.
Regarding
you
Michigan.
wouldn't
Get
do
that
Yeah.
out of here.
Not Joel.
You
Yeah,
dog, you.
Yeah, I did. I hit
What'd you
I hit the Detroit radio waves.
No, the
yeah,
radio.
Yeah, I did.
You're on
I
the
did.
radio.
We're
What
on
were
the
you
line
saying
here
on the
with Joel
radio?
Elconin.
Caller Joel. Joel from
Caller
West
Joel.
Bloomfield.
Caller Joel.
And then after I get done, of course, my brother-in-law, Caller Joel. So Stocks and Jocks didn't know about this. Do you know there's a big quarterback controversy here
What?
at Michigan?
A quarterback controversy?
Yeah.
Where?
In
What's
Michigan.
going on? Who's the quarterback?
Cade McNamara led us to beat Ohio State last year. Led us to the semifinal game. Was named a starter. We have just a fantastic sophomore named JJ McCarthy, right? The guy. There's only 3 quarterbacks in the NFL that are faster than him, and but so everyone wants him to start, even though this guy led us to a 1-loss season last year. And so they're ripping Harbaugh and this, that, and the other thing, and so I called in, and the way I started it, Lisa was around. She got mad at me. I said, you guys on your radio station and the national media are a bunch of bozos. That's the way I started it.
They loved that.
They did. And basically, I think Harbaugh knows that Cade's going to be a better NFL quarterback and JJ's a better college quarterback. And he's going to keep them around, and he's going to cultivate both players. And they didn't want to have any of that. They were ripping. Even the people that called in after I was on were ripping me. So
That Joel was the controversy.
I was a controversy.
Who was that Joel guy called? And this guy doesn't know anything.
And meanwhile, there's no more knowledgeable college football fan in the nation, in the world, than me. And especially, you go to a Michigan game with me, I'm calling out plays. I mean, it's unbelievable. But
that's unbelievable. My knowledge is unbelievable.
You hear that, Harbaugh? Listen up.
Yeah,
he's got some. I
God.
tell you though, like they say, the master. If you got to have like what is it, 10,000 hours into something to become a master of it. You've got more than 10,000 hours into Michigan ball. I'll tell you that, Joel.
So
if anybody's a master, it's got to be. You got to be up there.
Put another 0
hours,
on there.
I think you got your hours.
Why are we up today, Dennis?
Why not?
There's nothing going on that's good.
We do everything that the market thinks we're not going to do. Everybody get a little bit too bearish. What I will say on SPY, you now have a major level of support. We got a double bottom from the last 2 days in SPY. I don't look at those futures. I don't like paying $700 a month.
Know, Dennis. We know.
390.04, 390.33. That's a double bottom in place in SPY. That coincides with the July 26th bottom of 389.95, rounded all to 390, and saying 390 is now major support. As long as we hold that, you can do a little bit of dip buy-in, but if we take that 390 out, Katie bar the door, as Joel Elconin would say, we're going to see 380.
Yeah, no, and we got to set up. You had the Friday down day. You didn't make a new low for the week, but you post your lowest close for the week, and I watched it on Sunday and Monday, and they got it a little bit in the red. I was hoping it was going to get close to that double bottom. I got a big nothing done trying to buy it there, and I just didn't have a hankering to short it. I just didn't have a good level to short it. And now we're just drifting higher. Of course, when the real liquidity comes in at 9:30, maybe can we hang out for like a week or two? Maybe not go absolutely crazy and then do the rollover and then do the quad rich.
We don't do all that. Come on.
No, we're going crazy. It's September. Of course we're going to go crazy. This ain't the dog days of August anymore. We're now September. My kids are going back to school today. People are going back to work. Bill Ackman said all the people in his office are going back into the office here. So there's going to be some action. We're going to have some chop.
How's this? I'll give you some bear analyst outlook. Morgan Stanley strategist Michael Wilson cutting his expectations for earnings per share growth for the year, saying that a slowing economy is now likely to be the bigger concern for stocks rather than scorching inflation and a hawkish Federal Reserve. We think the next quarter will end up containing some of the most significant downward revisions to forward EPS forecasts we have seen in several cycles. Wilson wrote in a note on Tuesday. So Mike Wilson, Morgan Stanley's bear, stepping up here.
I agree. I think there's going to be problems this next earnings season. I think a lot of the problems haven't shown up yet with higher rates of people getting pinched, but you can see it. You can start to feel it out there now. I was tweeting out my one friend in New York City here, went at Abercrombie and Fitch over the weekend. Nobody in there. There was he said that was a ghost town. I don't know if that was just maybe it was
Dennis, that's Abercrombie and Fitch.
Maybe it's always a ghost town. You're right.
I wish you'd come up with something a little bit.
There's a reason the stock's sitting here at a multi-year lows, really. So, maybe it was bad. I should have had him go into some other stores. But, yeah, Abercrombie and Fitch not looking good. I just feel like it's going to happen. I mean, you can't raise interest rates this much and not eventually feel the pinch. And the Fed has laid this out. This is what needs to happen to kill inflation. You got to kill demand. So give me some short-term pain for the long-term gain. The only question, it's not about whether we're going to recession, not about whether we're slowing down. The Fed is making us slow down. They're going to continue to raise rates until we slow down. The one thing we need to see is start slowing down here so they can stop raising rates. As we don't see it slowing down, it's actually worse because the Fed's going to get more aggressive. The Fed-induced recession needs to happen because they're not going to stop raising rates until we get it.
They play extremes. They love to play extremes.
I'm so conflicted here because a lot of the things that you're saying here, but Obviously, Mike Wilson didn't read his Barron's this week.
What's Barron
Okay.
saying? What is Barron
Oh
saying
man,
now?
the Barons alert! The
Oh
Barons
gosh,
alert
what are they
here.
saying now?
The labor crunch is here to stay.
The
The
labor crunch is here to stay. It means jobs for everyone.
Yes. So how it
They
just
got to run
explain
out
it to me.
eventually.
How are we going to have a recession without much higher unemployment? Please, Milton
It's easy.
Friedman, explain
They'll get
that
it
to me.
there. They'll get it there, Joel. That's what we're all pointing to. They're gonna get it there. They're gonna get that unemployment up past 4% because they're gonna keep hiking until then.
It's just, even if that stays the case, though, it's not good for stocks that
Yeah, it's not
labor,
good.
let's just take it away from recession. Say we don't go into recession. Is it still good for stocks that their margins are getting squeezed on both sides? I mean, obviously, we know material costs have increased substantially. Maybe some of them are starting to come in slowly, but labor costs are not coming in. Labor costs, or anything, are going up. I mean, you just talk to people out there, you talk to businesses, and they're like, we can't find people. There's a sign in the town here where I'm at, McDonald's hiring $18 an hour. I mean, this is McDonald's. That's a minimum wage job. Minimum wage now in Ontario, I think, is like 15 something, but still $18 an hour. I mean, it's got to be tough squeezing on both sides here. So I'm just at the point where I just look at this earnings season, going to be coming up in another month, and think, how are they going to be, killing it? How are these, companies going to be right there throwing up these big numbers? They're not. So if we get the same earnings season where good enough is good enough, but eventually good enough isn't good enough. And I've added all up, and the market is still not cheap. So that's why overall, I'm still got to be a seller of stocks. As a trader, we got a 390 to lean on. So, you got to have your time horizon. I've got 47% cash in long-term portfolio, and that its only job in my long-term portfolio, registered money, is to invest. It cannot do anything else. All it can do is invest. So if I'm half cash in that thing, obviously I've got some major concerns. It's a big risk I'm taking because the market takes off without me. Everybody gets better off without me. But so far, it's been the call to have a little bit extra cash.
All right, well, let's talk about the energy crisis. Of course, it's expanding out there, the talk, and I feel this is more macro, so I want to touch this, and then we'll get into Bed Bath & Beyond and digital world acquisition. So I know the chat can hold on for that. Let's talk about this. So Gazprom stepping up here now, saying that the ball is in Siemens Energy court. Gazprom will not resume pumping until Siemens Energy repairs faulty equipment. They told Reuters on Tuesday that Nord Stream 1 pipeline, Europe's major supply route, would remain shut as the turbine at a compressor station had an engine oil leak, sending the wholesale prices soaring. And of course, we're going to keep on watch what happens with natural gas. But Uniper, Germany's kind of utility here, CEO stating, I have said this a number of times now over this year. I'm educating also policymakers. Look, the worst is still to come. And of course, other news coming out of UK, British Prime Minister Liz drafted plans to freeze energy bills for UK households in a bid to migrate the country's spiral cost of living. So they're going to freeze energy bills and probably be putting out some stimulus to go ahead and make sure that they could pay for that. So there's a lot to talk about here, and then we can get into all the oil talk too. This is kind of more the natural gas.
So many issues, Mitch. I mean, this is so hard. Why it's hard to pay 20 times earnings, or 20 times on a forward basis, or even a backward-looking basis, I guess, for this market. I just can't add it up. I can't add it up to get to all-time highs. Like I keep saying, okay, well, how, or is Craig Johnson going to be right here? How is Tom Lee, or Tom Lee? Yeah. How is he going to be right? How are all these analysts that are calling for all-time highs? I don't see the math. I can't add up. So I see the only way we can get to all-time highs is if FOMO takes over and the market completely becomes disconnected from reality, which it has in the past. So it can do that. Anything is possible. Never say never. But if you believe in anything, if this market is trying to follow the economy to a certain extent, I just can't see us just blasting off and just getting everything better again. I mean, inflation, wage inflation, it sounds to me like Joel from that Barron's article, is here to stay. And material inflation has come in, and that helps. But this wage inflation is going to be sticky. And, Ackman was saying, we can get down to 4% here. I don't think anytime soon. So I'm just sticking with caution. And the energy thing is a whole different, it can't open the can of worms. I mean, you look at these European stocks and you can look, you can go out and look at the EFA. We're sitting right on the July lows. So there's, a good feel for, what's happening over in Europe just by looking at that ETF. I mean, you can look at the European banks. They're sitting right near the lows. I mean, Deutsche Bank is at $8. The low of the move back in July was $7.54. Very close to the lows of the move. Barclays off a little bit. Credit Suisse is right there. Made new lows actually 2 days ago. UBS, we're just doing, UBS had a bad tick, looks like the one day, but, sitting near the lows as well. It's just hard to add it all up to say rah, rah, bull, bull. Oh, every bear market only lasts a year, so we'll get our money back in a year. It doesn't have to go that way. Your silence again. Your silence is deafening.
because
silence is deafening, Joel.
Well, you go. I mean, Mitch started talking about oil, and you
not oil. That was just all
natural.
natural. That was all natural gas talk.
Okay.
We're putting it all together.
Okay, putting it all together.
We still got more.
Your second premise, I agree with about eventually things getting hit on earnings. But what I'm sick and tired of hearing about is $130 crude and $20 natural gas. We hear all these talks every single day. I hear this is happening, this has happened. And what's the price of crude done? It's gone down. Okay, what is natural gas? Everyone's breaking at 10, going to 12. They're backing down. I don't understand it. If this is the final nail in the coffin for our economy, and $130, $130 crude, $12, $15 natural gas, it's over. It's really going to kill the market. But what is the market telling me about the price of crude? If this is so true, why aren't people backing up the truck at 90, 95, 100?
Because
there's still, there's no contango. There's backwardation. I don't understand it.
And this is why the commodity bulls, you can't have it both ways. So I've argued for lower crude prices too, because I think we're going into a recession. I've said that on this show, and people know I've been saying that on this show. Demand destruction will hit the commodity markets as well. And that's what we're starting to see. So you do have supply, demand. So supply coming down, as to Mitch, obviously is going to increase price. But if demand is all of a sudden starting to go down, that can compensate over offset it. So you will get demand destruction happening. And I think the reason crude is coming in is you are starting to see some of that demand destruction happen.
I think the only reason crude hasn't taken off is because of demand issues in China.
Demand issues everywhere, Mitch.
I mean, majority from
Europe's
shutdowns,
a mess here.
The shutdowns.
Go back
to
last week to our guests here. My kids are going to school, so I'm just waving goodbye to them.
Bye. Have a good day.
Goodbye, kids.
Hey,
have a good day. The first day back at school.
Back to school. Back
to school to prove to Dad that I'm no fool.
Well,
I never heard
Billy Madison, baby.
I never.
OPEC adding to the games. Right.
All right, now we'll go with the Billy Madison quotes.
Billy Madison's an awesome movie.
These guys. That's a favorite one. Okay.
All right, go ahead. So OPEC playing games also, right? Deciding to cut productions by 100,000 barrels per day from October. But last month they agreed to raise oil output by 100,000 barrels. So pretty much just nothing. I mean, that just cancels it out there. And then there were comments, of course, by Russia about any actions to impose a price cap would lead to a deficit on initiating countries' own markets and would increase price volatility. This was, of course, battle back from Russia's energy minister.
All of that is absolutely meaningless, though, in the big scheme of things, because price tells all, like Joel is saying. I agree with Joel's argument here. If we're going rah, why is crude continue to go down? Even with natural gas here, it kind of looks, look at UNG. And it's, obviously ETF there. But
I don't know how it hasn't taken off. To me, this is kind of one of those
If it's not taking off in this, that's telling you something.
When's it going to take off?
Yep.
Hey, I've talked
Don't
about
kill the messenger.
We still got winners.
Don't shoot the messenger.
Winter is coming. That we cannot doubt.
The
And there is a
seasonality is there,
crisis
but
coming.
that looks toppy to me, Joel. That UNG chart in that top right-hand corner looks like it's kind of trying to top out. And that's a good thing for the market. So you do have, as oil prices have come in, that helps. I go to the pumps. It's $1.50 a liter. It was $2 a liter, 2-3 months ago for gas. $1.50. That helps a bit, but does it help enough? Maybe it helps with the CPI coming up. And there was a good question in the chat, I believe, on my Twitter feed as well, asking, maybe we could take it over to this and move away from the commodity talk. But I mean, we're going to get a CPI data point here in about a week, and in next Wednesday. And is that CPI data? Inflation, commodity inflation is still, come down, I think, probably from the last report. Does that CPI data look okay and give you, that short-term pop like it did last time?
I don't know. Let's
Questions
keep going.
for the chat on that too. I think that's possible.
Yeah.
I would sell that pop, but I think it's possible.
I just don't see how it came down much more than what we had last month. I feel like prices are about the same, and so we could possibly see like just the same inline number here. Let's go ahead.
They want to see anything. This is such a silver lining market, though, Mitch. If they see anything okay, they buy. I mean, that's the one thing going this market's way.
I would agree.
Is that the most forgiving market. Everybody wants an excuse to buy. They want to believe that we're going to all-time highs. Everybody, wants to believe that Bitcoin and crypto is going to turn around and, make new all-time highs by the end of the year. Everybody wants to believe that. And the market wants it as well. So, you haven't broken that mentality yet. There's not real fear out here yet. And I don't know if that's to come. Or maybe the bears just lose. Maybe, as a trader, you've got to always be able to swing your opinion here. When we were 430 3 weeks ago, or 420, I started early after that CPI data, and we had the run up. I was like, I'm selling into this strength now. I kind of predicted that the CPI data would be light. I predicted that there was going to be a pop up, and I decided, 3 days early. I was 3 or 4 days early for sure, but I decided to start selling stocks. Well, I'm just wondering, is that the same thing happen again? Do we get another CPI data point that shows a little bit lighter? Because if it does, they'll rip this market higher again.
We'll have to go ahead and see. Let's go towards the next topic here. Let's get out of that now. And we'll put it on the radar that today we do get economic data. It's important. Non-manufacturing PMI estimates at 54.8. Prior was 56.7. And so that's at 10 a.m. We're not going to be able to see that number, but I just wanted to put it on your radar out there.
And it's always important to know these numbers because you're just like la trading, and all of a sudden, boom, what just happened?
10 a.m.
You got to know those numbers when they're going to be important anyways. And obviously, Fed speak we know is very important as well. But there's so many balls to juggle with this market. It's tough to make a call. And, and we're flip-flopping around. That's why I'm kind of market neutral overall. I've got a lot of cash in the long-term portfolio, but I think you still got to be somewhat neutral here because we've sold off. Like, let's put it in perspective. People like, you got to sell stocks. They're saying it now. We fell 10% in 2 weeks, Joel. 10% of the overall market in 2 weeks, and now they're selling stocks. I'm like, where were they 3 weeks ago when we were talking about selling stocks in this show? I feel like we're ahead of everyone always. Like I said, I'm always 3 days, 4 days early. So if you actually, the sweet spot would be probably to listen to this show and execute 3 days later because I'm always 3 days early, but I'd rather be early than late. And CNBC, they're always late.
You know what? We should play, instead of doing live shows like today's Tuesday, we should play, because it was a weird week, we should play Wednesday's show today. And then we do the show, and then we put it on. We put it on 3 days later.
3 day delay. We do very accurate.
3 day delay. I think that I'm gonna talk to the higher ups about that. What you had on the upside, we were all looking at the 50, and it exceeded it, right? Just enough to make you think, wow, we might be going back up, higher levels. And now on the downside, every move has a counter move. We are still below the 50% retracement of the rally. Like after we had the move up, this retracement, then I want to see what the retracement is on the way down. So, we have exceeded it. Dennis, you mentioned a double bottom. I think it's really important this week. Starting out September. Start to people gear up for the next expiration. If we could just calm down a little bit. Have the ranges come in, not have quite the volatility, and build a base, we have a chance. But I think you gave everyone, a great level. A great
390.
level on the downside. Yeah, I know it's still 50 handles away, but to catch bigger moves, you have to you have to risk a little bit more. But that's a good level. Love to see us break into the 4,000 handle, and here we are stuck at 39.50.
It's hard to be rah bearish here too, just because we've just sold off 10%. I find myself, if you're selling here, you're selling the dip. I don't make a lot of money selling the dips. So, I mean, today you get a rip, so maybe you're no short-term trader, you're selling into this, but overall, it's been a pretty good sell-off here. If you're selling stocks in your long-term portfolio now, I think you just, you missed the window of opportunity here. I feel like we could bounce back up to, on a good CPI number next week, we could bounce back up to 410. It could happen, and then I would be dumping stocks.
My only thing is
retracement of this recent move.
My only thing is that's next week.
Yeah, it's too far away.
Too far away for me. I think. I mean, I think it leaves room. You know what that leaves room for me? I think that leaves room for us to come down closer towards those June lows. Then we could see more of a rebound because we'd be an extreme oversold. We are still oversold. I mean, at least we did come quick. I'm with Joel a little bit. Some sideways action this week between 400 and 390 is something that I could see happening. Just a little playing in between there. But it's going to be interesting to watch. Let's go towards a conversation here. We'll give the chat full. Just wanted to ask the chat, please remain respectful in this next conversation. Don't want to have to put people on mute or timeout or block people for kind of pointless. But let's go to Bed Bath & Beyond here. CFO Gastuva Arnal died by suicide, and it's causing the stock to definitely come down fast here. Wow. And the question is, I mean, now what do you do if you're an investor in Bed Bath & Beyond? I think you got to ask your question today. If this is your chance to get out, or do you stay in a stock now that has a lot of issues here?
I mean, the only thing that could turn the story around, like I've said before, is if Cohen rebought shares, because obviously he sold at 25, 27, 28, 29. He sold some 2019 as well. I don't think it's out of the realm possibility that he could rebuy shares, and that would ignite this thing. But besides that, I mean, you got support down at 5. That's a long ways away. That's where this all started. Obviously, it's a very sad story, when somebody dies, and especially by suicide. I feel terrible for the family. So it's hard to talk about, from that perspective. So I think we just talk it technically here. You obviously are breaking down here once again.
I don't even have technicals.
It is a headline-driven stock. That's why I was like, I'm challenged to see what the next headline is going to be for the Bulls. I would say the only headline that would really, get it going the other direction is if Cohen rebought shares. And yes, rest in peace, CFO.
I think
don't know what to say much.
I think you guys did a good job covering that.
Yeah, it's tough. Technically,
there's not much.
And obviously, it's headline driven. The meme stocks are getting hit a little bit on this. GameStop is trading down. We know they kind of do trade together to a certain extent. There is a relationship there. I do trade these stocks against each other sometimes. The GameStop has come off substantially. AMC has come off substantially.
Yeah.
Ape has come off substantially. They've come down enough that I'd be cautious as I was putting on short positions on these things now. I mean, you do see, boom, boom, and then there is these violent little squeezes up here. GameStop down here once again. I feel like 25 has got some support there. But again, I mean, there's no fundamentals to support price. So, I can't say, well, eventually, if I buy it here, I've got a long-term time horizon, I'll be okay. A long-term time horizon on some of these stocks, I think you're not going to be okay. But as a trade, I mean, we're $45 on GameStop like 10 sessions ago, 12 sessions ago. We're 26 here now, Joel. This has quietly been just a
2 for
disaster.
1.
Yeah, it just quietly been cut in half. So nobody's talking about GameStop. It's all been talking about Bed Bath & Beyond. Just quietly, GME has been cut in half. So I do think you got some support down here at 25. So you want to take a flyer, there is some support. You're going to come to some support here eventually.
All right, let's keep going. Let's go towards
the DWAC, tie it in.
Digital World acquisition. Let's go towards it as it's trading lower following reports suggesting that shareholders have rejected the special purpose acquisition company's proposal to extend the deadline by a year for its merger with Donald Trump's Trump Media and Technology.
Oh man, this is just a disaster story too. How high did this thing get?
I've said it from the very start of this. This was
It's
a
down
short from the
90%
very
from the
start.
highs.
This was a short from the very start.
Well, it wasn't a short from the very start because it went from 10 to 175, so it's all about timing.
Even then, I still think it was a short, but
yeah,
I
but it would've
never
been,
thought this was
imagine
going
shorting
through.
at 70 or 80 and then it goes to 175. How do you control the risk on that? I mean, it probably has been a short for the last few months for sure, as it just continued to leak, and
I
obviously
think
short
this had
1 year.
regulation concerns all written all over it. So
Just everything. It's just been a tough story. So especially if Elon Musk still is forced to buy Twitter and then he's running, you got one of the greatest minds out there running a competitive firm. It's all, somewhat scary to me to be an investor here. I haven't liked this story ever either, Mitch. I didn't want to short it because it's going straight up. But
did a hard bio?
yeah,
I don't think so anymore. I think
still think it
DWAC is
is.
fine now. Let me look.
Maybe.
I'll look right now. I don't think so.
I know
No,
it
I
was
can
at
look
one
it.
point.
No problem. No, it's not tough. I don't trade it really though. DWACU, you can trade against it too. There's that one out there, but they're tough to call.
We'll see what happens on DWAC. It's getting whacked right now.
Yeah, down 539. I mean, $10, right? That's where the move emanated from. And if
DWACU.
There you go. You see, that's what you do if you know you're a SPAC trader. Look at the units.
I've traded those SPACs and SPAC units against each other lots of time. There's good arbitrage opportunities there, so those trades do work out pretty well.
There you go. Looking at that ARB there. We'll see what happens there. I'm definitely will pay attention to those units. All right, let's keep going. Let's get into our guest today. Joel, you want to go ahead and take on over here?
Oh, I sure do. And what a good time to talk about sports and sports betting.
Yes.
And we have Jeff Kamys.
NFL week.
He is the creator of the iBET ETF. Let's bring Jeff on. How you doing today?
Hey, great. How you guys doing?
Doing
Great
well.
to have you on.
Yeah.
He's got a good mic.
Yeah,
I do. Yeah, I brought my own gear. I'm actually on the road. I'm on a road trip. I'm in California, so it's pretty early for me. But I figured if I just stayed up all night, I'd be okay.
There you go. Pull the all-nighter. That's how you got to do it. That's how you got to do pre-market prep. You pull the all-nighter. Awesome.
All right, so let's talk about your ETF. Creating the ETF. iBET got on the board in late 21. Hasn't had the most impressive performance, but
right.
Let's just talk about DraftKings. I mean, we just got to go to the top components, and there's a lot of fans of DraftKings out there. But the big question is when is this company going to turn a profit?
Well, I think you're starting to see them move in the right direction, especially with, the big question really that's gone on in this space really is how much money are these companies going to be spending on customer acquisition? I think what you're seeing is the newer model is we have California potentially coming on in November, which is really exciting here. We have two propositions, 26 and 27, that are on the ballot for November. And let's say that, these teams get, that California becomes legalized in some way. You're going to see 17 different or all the pro team sponsorships you can in California. And that's really the strategic model now, is getting in place with an existing type of, company, either it's media or sports related or a sports team, and kind of creating that. And I think that's going to take down those customer acquisition costs, which can sometimes be, it's hard to find that number, but I know we talked about it between $500 and $1,000 per customer. Some of the initial things that they were offering for signups, like matching bonuses of 3,000 and all these numbers are kind of outrageous, even though it's not really false bets for the most part, that those are kind of outrageous numbers. And those have definitely hurt these stocks. And I think DraftKings, kind of has been the poster child for bad behavior in the space. And I do think that they've kind of reined in the CEO a little bit in terms of, when they're going to do events. I think they have a good PR team around him now that's a little bit tighter and not talking about like the sharps, hurting teams and how the weekend's gone because people are, hitting certain bets that they didn't expect. And, I think it's super evolving. I think DraftKings within the next year is going to be looking closer to being profitable.
But I've gone back and forth with the guys on this, and I mean, that, like, to me, the bigger incentives are just showing or just telling that the people are not making money doing this, right? And they're
Yeah.
just having to keep going to the well. I mean, doing sports wagering, over the years, I like to do about suicide pools, but that's about it. Um, I mean, is it just, I mean, are people just going to, especially in tight times here, with higher inflation? I mean, isn't that just an indication that, people are just less reluctant to go to the well, dip into that savings account, and they need to offer higher incentives?
I'm listening for this when I'm out, if I'm out in an establishment. And I think a lot of people, you may be just a $5 better per game. And I think, it's sort of, I think one thing we've proven historically in our culture is that vices are recession proof. I think people will still put a wager on their game. You're having a bad week, maybe something's not going right, but that game is going to bring you a big deal. And, we're starting in the NFL season here, in college football has just started already. And I think those are, maybe you change your wager, but I think you still had a fantasy sports background for a long time. In fact, that's how I started kind of in this industry. Why it made sense to me. I had a company called Dr. Stats Fantasy Sports. A company like that brings a lot to people, a lot of joy for a limited amount of money. And I think that's what's going to go on. I think we're going to see, the individual investors. I talked to this company like gambling.com. They're sort of an affiliate or a lead generator for the space. They tell me that right now in the US, most users have 1.7 apps on their phone. But that in Europe, where it's been more evolved, they're sort of in the 3 to 3.5 to 4, kind of apps that they're using in and out.
Jeffrey, I just got a general question.
So
Great
I think
one
competition, but
sorry.
But I think they'll also have, I think there's going to be loyalty based on, just being comfortable with a service. And I do think this will continue to grow. And I think ultimately what you're going to find is, most of this business is going to be done right here on our phones. And I think that makes it high margin business. And I think we've seen some of those numbers being really great. But I think that we're in, people ask me, we always have that inning analogy in the stock market. And they'll say, hey, we're in 7 of the bull market. And I'll always say, this is 0. We're in inning 0 of this sports betting, especially in the US. Now, maybe in Europe, they're in inning 2 or 3, but I think here we're still in inning 0. We still have 3 really huge states that could potentially come on in the next 2 to 3 years, with California, Texas, and Florida. So I think there's a lot more growth into it being accepted and being everyday for the common person.
Jeffrey, general question from the chat, and I like this one too. Laura Jam's asking, how does one go about creating an ETF? I mean, we've had a lot of ETF, and I've never actually asked that question. So how do you go about creating an ETF?
What's funny is I think in this case, it was sort of like a COVID story, right? I was sort of in my COVID bubble like everyone else. I had a sports betting and gaming kind of started. I thought of it actually during, I think, the Packers Tampa Bay NFC Championship game a couple of years ago. And I just thought, I started coming up with names, and then I came up with iBET. I was surprised it was available. Thought it was really kind of simple, sort of like, the other ones that have the eyes. Really, it takes a long time. It could take between 6 months and a year. If you're an existing ETF provider, you can get one launched in as little as 3 months. But you go through some, like a custodian service like US Bank, which I use, which the fund's traded on. And then you start this due diligence process and, kind of get paired up. The trust has to approve you. It's protection for the common public. And then, you go through the process of, writing up with an attorney and sending into the SEC. They'll send you some rejections, and you go back and forth. And then eventually, after you get to the 72-day period, which is the waiting period. Now, that would be like on an ETF for an existing fund. Like if I had a second ETF, it'd probably take me 3 months to get to market. But generally, like in a case like myself launching my first ETF with this fund, Inherent Wealth Fund, could take upwards of 7-8 months to a year.
All right, I'm going to jump in here now. 2 that I'm watching and keeping a close eye is one, I really like MGM, but I'm thinking, do they ever spin it off? Would MGM bets ever spin off? And what do you think about that? And then the last question, I'm going to do a twofold here with Penn. And what do you think about them completely going into Barstool Sports?
Yeah, I mean, I think that's smart. I think, first off, MGM, no, I don't see any kind of spinoff with that. I think they're going to more build into partnerships. I think when you see something like MGM, which, you brought up 2 companies actually that were wanted, the Cosmopolitan, they have a long relationship with Vici, who of course owns like all the real estate under all the hotels in that area in Vegas. And, they got the inside deal kind of on getting the Cosmopolitan, which is key demographic for them, of course, because it's the younger better. That's the 25 to 35 or 40-year-old. I love the Cosmopolitan, but I'm a little too old to go there now, I feel. So I think that was a key acquisition. I think it shows that MGM has long-term standing in this. I think in terms of Penn, I think it makes sense. I think what you're going to see more and more, and what I've been saying for the past year, is if you have media companies, you're going to have sports betting. It's just a natural.
Just one question here
Content
before
that's sticky.
we wrap things up. Jeff, daily fantasy sports. What is your estimate for peak percentage of Americans that will do daily fantasy sports? Right now, that's only 12% or 30 million. Do you think that maybe that's the future for these companies? Is the daily fantasy sports?
I think the women's better.
Oh, there he is. He's back here.
You saw the growth of the female better. Actually, they increased their percentages higher than men over the last year. So I think you're getting more and more people who wouldn't naturally or normally be on starting to get deeper in this space.
All right, we're going to go ahead and wrap on up there. Thank you for joining us today, Jeffrey. We'll definitely have you back on, and we'll keep close eye on iBET. Appreciate you coming on today.
Thanks for having me.
All right, let's go ahead. We're going to wrap on up. Sorry about that, guys. I know that the connection was a little bit choppy. Want to let you guys know. Appreciate you guys hanging on there with us. We wanted to ask some good betting questions. You guys know how we like this industry, so it was fun to get towards it. Now let's go ahead. Let's get out of that. What do you see about the overall market, or do you want to wrap up on the sports betting talk, Joel?
I don't know. You guys know how skeptical I've been on this. It's
one thing
I feel like this pullback on DraftKings just kind of mentioned there, but go ahead, Dennis. What do you got?
Jeffrey said, which obviously Joel isn't a fan of, but he said vices are recession proof, and I think he's right. And I think that was a good point to make, is that people, even when they're broke, are going to gamble. And you know what? Some people gamble even more when they're broke because they think this is the only way out. So I don't think like a recession all of a sudden stops people from gambling. So, there's a good point he was making there.
I agree. And this is one that I'll be watching for a pullback. You guys know I took it from 1380s up towards that 17. Now it's coming back below 16 here. I'm kind of interested in DraftKings this week, especially with opening day kickoff on Thursday.
Yeah.
Who knows? Maybe today gets a little pushback. It's gotten a lot of days on the pullback, and so it's come down really fast. RSI is completely oversold. Going to be looking for maybe a DraftKings bounce today.
Penn too. DKNG and Penn. I could get on both, and obviously Thursday night kicks off, NFL season here. So, always September starts, hockey preseason up here, we start getting excited about it. October is the big
sports
month.
Are coming back.
October is the biggest month for sports, like one of the biggest months for sure. You get them all back. Obviously, baseball playoffs, and then football's fully going. Hockey starts, basketball starts. I mean, seasonality is working in its favor. Now, again, are we too early? Are we 3 weeks too early on this? I do agree with you, Mitch. I think there is a bounce here in DraftKings and Penn, just from a seasonality perspective, but I just don't want to be early.
We'll see what happens there. I'll keep an eye on it. Let's go towards other news on out there coming from CVS, saying that they would acquire Signify Health for $8 billion or $30.50 per share in cash. Signify provides technology and analytics to help in-home patient care. CVS and Signify Health would hold an analyst call at 8:30, so it should have already been going on. I don't know if the stock has made some reactions since that 8:30, but there was an investor call at 8:30.
Yeah, and the stock obviously has already been trading up on rumors somebody was going to buy them. Then we found out it's probably CVS, and now we get the actual announcement of the deal. So don't be surprised why it's not trading higher here. This stock was $15 a month and a half ago. Is this a Kathy stock?
Yeah, she sold a majority of her position, though, when it popped on that last pop.
On the last one, so she's got out of most of it. So, well,
she gets out early.
She got another one right, so we always give her heat. That
she gets out early, and she buys them late, man. Come on.
She's and we won't get into Kathy talk. I was just curious if it was.
She better hold on to that 40. But
Joel's
what do you think
silent
about
over
this,
there.
Joel?
CVS,
Anything there?
$98. You
Okay.
know, that's your, I mean, it came down, had the decent earnings. They tried to get it into the gap and they couldn't. And so 98, as long as that 98 holds, maybe we get well, first things first, if you're trading this today, you're still just like everything else, quite away from Friday's high of 101.02. So that's your first resistance point, but has to stay above 98.
All right, let's go towards Kathy as we take a look at growth stocks. And what are you guys
Sure.
feeling now? There's some of these that look interesting for bounce. I mean,
We are oversold, Mitch. As much as you were selling the RSI when we did the show 3 weeks
Yeah.
ago, we were overbought. We're oversold on a lot of these names too. I mean, ARKK's come from 53 to 40. So,
I agree.
is it going lower eventually long term? I think so, because I don't agree with their strategies. But I'm still going to stick with, I said it back in June. I thought the 52-week low was in. We're getting dangerously close that it might actually kiss it again here at 35. But, I still think it is. I still think that a lot of bad news, is potentially priced into this market because, we're as much as good news 3 weeks ago, we just sold off 10%. So I still think you're going to just chop around a lot here. I don't think we're going to go in and we're going into this, boom, we're going to go into a market crash and everybody all of a sudden realizes, that, hey, inflation's here to stay and the Fed's not winning. There's lots of, potential, like with the CPI. I just don't see us getting back to all-time highs.
All right. How about we play a little game here where I'm just going to try to call out some of these names that are in ARKK, and you guys tell us what you guys see on the charts there. We'll try to go a little relatively quick.
The Kathy game.
First
4
one
minutes.
up
Go.
is Shop.
30, 30, 30. That's all that matters is 30. Been down here for a long time.
They're hanging out. Yeah.
It takes out that 28, 29 is actually going to be a good short opportunity if it can take out that support. Starts ticking 29, get out. That's what I would say. But support is support until it's broken. It's at major support. So if you want to take a shot, you know where your out is. $29 I'd be getting out.
I think you said it well there. Let's go to Unity. Here, Joel can give us this one. What do you think?
Unity, and I'm just going to go this to the Kathy ETF too.
Yeah.
I usually like to see, Kathy give you like double bottoms or triple, in the same area, but it didn't do that on the top. It made that island top when it hit 54. So the question is it going to do the same thing on the downside? Like, is it going to hold the 40? So the same thing with Unity. I mean, had a nice rally off the low. You have a spot, you have an exit point, really no other daily lows coinciding with it. But I can wait. I feel there's it's worth a shot of alongside because you have an obvious exit point on both of these.
All right, let's go Square.
I'll take Square.
Down to
coming into, and I've actually, this is a stock that I swing trade really well. I don't know why it is, but I've obviously took up that recent move. I've done well swinging this thing. 60 is huge support. You're coming back into that area there. I sold my swing down up at 91, got almost the top. Now I'm looking at 66 and thinking maybe I should reload. I almost kind of want to wait for the 60 though. I feel like you come this far, maybe we can get a shot at that 60, which is major support.
I just the way this chart's feeling right now, the way you had that major rally from under the $60 area, I think the true bulls in this thing have moved up their target area, and 65 seems to be the level. You're trading 66, 70. So I don't know. Right now, with the market dynamics, of course, everything can change with the CPI. Doesn't feel like we're going to get down to under that $60 area, but once again, you have a place where you need to cut out on this, and it's a big day for these stocks. It's a big day for the market too. If we just roll over and flop and go red on the session, then we're going to take out the low from last week. This is a big day, so same thing here.
Big day.
Yeah, just trying to be bullish, but that price action on Friday makes it awful hard. You didn't get the flush. You didn't get the weekend flush. And there was plenty of news, more China lockdowns, tough talk from Russia, a lot of reasons for it to get flushed, and it didn't. So, but we'll see when that real liquidity comes in at 9:30.
All right, Nvidia, the last one I'll give.
Oh, what a pain
This one's a
stock.
tough chart to call now.
Not even. It's just breaking out to new lows. When stocks are making new lows, you got to go. Is it
true.
oversold? Sure it is. But that stock's making new lows on the move. We need, like the Joel would say, some consolidation or something. Stop going down before trying to call a bottom in this thing. I mean, I tried to do it in Intel, trying to call a bottom, and boom, I'm instantly down $2. So learn the hard way. Even when you're putting them in your long-term investment portfolio, wait till they stop going down before you put them in there, because obviously, it's hard to just stop that falling knife. And Nvidia is a complete falling knife still right now. It's repricing. The PE is really high. They're trying to figure out, if this company's not going to make as much money as we thought they were going to make. There's a full repricing of risk here. It's not out of the possibilities that this stock could go into double digits.
Inside day. Looking a little bit more shorter term. So the Bulls got to make a clear defense here at 135.91. I just don't think you're gonna flush out if you take that 35.91. I don't think you get the immediate flush down to 32.70. On the upside, I mean, wow. I mean, it's gonna be hard to get excited about the stock. You've had 1, 2, 3, 4, 5, 6 lower highs in a row. So Bulls will not be able to assert any control, at least if you can make a higher high on the session. And that would be exceeding 141.71. This is a streaky stock. But following it closely after being one of the top components in the index. And you are now on a 1, 2, 3, 4, 5, 6-day losing streak. So will it be 7? Will it be 8? Will it be 9? Boom. Just, wait for a turn. Maybe you get a little streak to the upside.
All right, now one stock that will be on the radar in midweek, of course, is Apple for their iPhone 4 kickoff. iPhone 14 event kicks off on Wednesday.
Yeah.
So keep this one on your radar. It's an event that definitely will have investors' eyes. Do you see maybe a little bounce coming after a good decline there?
I think so. It's such a market stock, though, so it's going to depend on the overall market.
Mhm.
But
Definitely.
obviously, I've talked about this in some of our webinars. The Apple event, sometimes you do see a little run up ahead of it because they start talking about it. People start getting excited about it. So often on Tuesday, you see that, run up into it. Is it Wednesday morning? What time? Wednesday, 1 o'clock?
Usually
1 o'clock.
It's Wednesday. I don't
usually
have
1
the
o'clock.
time here. I'll look
It's
for the
usually
time.
1 o'clock Eastern.
Yeah.
So we'll just go with that. That's what I think it is. So yeah, you could see a little bit of positive alpha there, maybe from Apple there, a little relative strength maybe in the next couple of days. But again, the overall market's dictating so much of the moves here right now. That's all that's going to matter.
If you want to look for one positive in the market, the top component of the index has not given back half of the move yet. So Dennis mentioned, showing some relative strength there. Once again, you got your double bottom in the SPOOs. For all intents and purposes, you have your double bottom in Apple 54.67 and 54.97. So if you're taking a poke here, your out is. You filled the gap from earnings. So that's a good thing. If you're looking for a shorter term target today, we did come down. We 160.36. Doesn't really seem like it's in the cards yet today. But Thursday's close, if you're looking for another target on the upside, 157.96. That's a minor number for you.
All right, and I'll go to Carmen's stock here in the chat, ADM.
Ooh,
So
Archer
doing a
Daniels,
little ticker
man.
time here for you guys out there. Definitely smash a like if you guys enjoy us taking stocks from you guys in the chat. Give us a thumbs on up. Let's go.
You've had the run back. I mean, the stock sold off obviously back June, July, and then had the nice run up. Hasn't sold off with the overall market, been holding up quite well. That's the good news. The bad news is that you just have overhead supply all up here in 90 area as well. So I think I'm more of a take the profits and run on this.
Yeah,
right.
this is a tough one. I think you've had what that was not an all-time high. Let's see, 91.5, 85.5 point, 87.5, 88.5, 89. I like to see this get through 89 and hold, and then prove that it has the metal to get up and test in the 90s. But 89 looks like no close or daily high there. But actually, Now, nothing there at 89 for you, but it's kind of a number pulling back from a retracement off that nice move. Holding up okay, though.
I want to grab lithium, LTHM. I'm still long this in the long-term portfolio
Yeah.
there. I sold a lot of it, but I'm like, I'm going to hold a piece of this just for the simple fact is, one, it's impressive how well these lithium stocks have held up. You think about the EV, stocks really selling off. The lithium stocks have not sold off. So you can look at LTHM, ALB, obviously one of the biggest and strongest companies in the industry. A little more speculative, LTHM, that was the old spinoff, I believe, from FMC. And then LAC is another one too, which I don't believe they're making money yet. But you can see that we are moving to electric. So there's going to be a long-term demand for lithium. It's just not going away. So I think on pullbacks here, I think I'd be buyer of lithium stocks.
I've been holding this one for a long time. Definitely.
You still have it all?
Still have it all.
You never sell anything though.
No, I tried that discsion this weekend, and it did.
Well, at least it never allows you to sell anything.
No,
It's probably
it
a
just,
good thing.
I tried to give like the old, cash, have the cash situation, and instead of, at least I talked about not putting more to work, but maybe taking some off, and I gave my concerns, and she's, I'm not worried about that right now. She's like, I don't have time to worry about Russia and China, so. So lithium, this LTHM, been holding on to it for a long time. Every time it gets up in the 30s, I'm thinking, wow, it should be a great sale. Then it comes back down in the 20s, and I regret it. And now it's back up here. So you need a clean break over 34. It hit that back in May. It hit it back in August. So if you're playing at the upside, just hate to see another failure at 34.
All right, I'll tell you which one you should keep an eye out in this industry is PLL. Why do you want to watch Piedmont Lithium? Because they just announced news on September 1st of their new refinery plant in the U.S. And keep eyes for more projects like this. Of course, with the Inflation Reduction Act, we are looking at those EV incentives, right? A lot of those materials need to start being produced here in the United States. So you possibly could be hearing more and more news of projects being moved or created here in the U.S. So PLL, I like the chart. It's on my radar today.
Opening right into Friday's high. Keep an eye on 59. Go ahead, Dennis.
No, I was going to say, they've just all been impressive. The relative strength in these things, they've all held up very well considering the recent sell-off.
Yep, definitely ones to keep on our radar. We'll see what happens with these. ALB is another one that I keep on watch, and that one's holding up well with the market also. We'll see what happens there. Let's go to a stock in the chat. I did see Twilio mentioned by Martine. Let's take that one.
Where's that?
Stocks making new lows. You got to go. There's a repricing of risk. Companies that are trading at nosebleed valuations are not making money or not being rewarded in this.
I mean, is this nosebleed anymore? Is it?
The entire 2020 run, for the COVID run is gone in Twilio. It's right back to where it was pre-COVID there, which is impressive in itself. But I don't want to be long anything that's making new lows.
It's actually lower, I think.
Wow, this is pretty impressive here on a monthly basis.
Selling
Let's
pressure.
see here.
Impressive
2, 3, 4, 5, 6,
relative weakness.
7 out of 8, 8 out of 9, 9 out of 10. Lower lows and lower highs and lower closes for the month. The one break was when it rallied $1 in July. So show me a green candle on a monthly, and maybe we can talk about this stock on the long side. And in order to do that, so 69.58 that was your August month-end close. Call it 70. That's your major resistance for now.
All right. One last area that I'll be watching. I'll just go to the ETF that we've been keeping an eye out. URA. What happened with uranium now? Interesting setup here for URA. We'll see if it gets back above 24.
Just some of these stocks that like CCJ I always go to off of this, but it's just run quite a ways here now. I mean, a week and a half ago we're 22, now 28. So kind of just say I've missed this one.
Let's see. Trading up 80 cents, a little bit of volume. Opening into Thursday's high. I mean, I don't know how many stocks you're going to have opening into Thursday's high. So see what happens. See if the Bulls could get a 23 bid, but opening into your 2-day high.
All right, that's going to do it for us. Like always, you guys can catch Joel Elconin on PreMarket Prep Plus, where he goes through some stocks. So if you guys still have some on your mind or want to get some great Joel's great levels, definitely go ahead and hit up PreMarket Prep Plus. Anything else you want to leave off with, Joel?
No, just on the upside, keep a close eye on that pre-market high 63.25. I have a weekly number there, so after the week we had, after the day we had on Friday, yeah, I see us up 23.5 handles, but the Bears are still in control, and a close over 39.64 would make me a little bit more positive for the week, but we'll see what happens during the regular session. Triple D. I will check in with you later on. So
Sounds
everyone
good.
have a good day.
Okay.
All right. Have a good one, guys. Definitely getting you guys on out of here. That means we start wrapping on up, getting you over to live trading action. We got another great day for you guys. Like always, we got our live trading show that comes on next. That's from 9:05 over to 11 a.m. Then we got our futures action show. Come on over and learn some futures. Then, of course, we'll be getting into Benzinga Live with none other than AB as he gets into some entertainment, takes a look into the market. Then, of course, Stock Market Movers comes at you guys at 1 p.m. to 2 p.m. That's where I take on over and come back out here. I'll give you guys expert opinions. Got two great guests on today. Excited to talk about some oil game on out there with Thomas Hayes, like always. And then we'll get into, of course, At the Close. At the Close is where we covered all the market action with Joel Elconin. So I want you guys to come on over. There's too many of you guys that watch pre-market prep and are not at the Close. I want to see you there today. I'll see you guys in a little bit. Let's get you guys over to some live trading action with, of course, Zunaid and I as we get into this market.